Some of those results came after market hours, and therefore the story of Dalal Street's rally could perhaps be continued tomorrow. It's a great day, and we are here to tell you all that happened in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair.
Lata, hi. Over the next 30 minutes, as you said, we will talk about the stories. We'll talk about, of course, L&T and how that might react tomorrow. And, of course, we'll take your questions. We have guests joining in. Ashwini is looking at charts, and Prakash Diwan will answer based on fundamentals. Gentlemen, thanks very much, both of you, for being with us here on the show. But before we begin taking questions, let's, as always, spend 2 minutes wrapping up the day's events. Lata.
Well, we started off on a great note as far as global markets were concerned. The Dow had a monster rally, and crude prices were not higher. That's the best combo that we could ask for. Asian markets dilly-dallied in early trade, but then went on to end in the green. European markets were all round in the green. So we had a perfect global setting in terms of crude and equity bullishness. There was a bit of consternation because of fear that the RBI government standoff could result in even a resignation from Mint Street, from the governor. But fortunately, by about 12:30, that problem was assuaged with the government saying, putting out a statement saying that they believe in the autonomy of the Reserve Bank. After that, the fears in the market receded, and we saw the markets going only one way. It was all round shining because the rupee was under the weather due to these Reserve Bank issues. You saw IT stocks doing well, and bank stocks anyway were doing well after the spate of results. First Union Bank, then Bank of Baroda. So, there was lots of sectors with green. But you tell us those details, Prashant. Today it was difficult to find a red sector.
So I'm not going to mention a single red sector for that precise reason. IT, PSU banks, pharmaceuticals, by far the top gainers. IT stood out. PSU banks, I think for the week now, 3 days, 3 sessions, should be up, 8.5%. And of course, the pharmaceutical story continues. Top Nifty gainers, Tech Mahindra, Indiabulls Housing, HDFC, HCL Tech, UPL, IndusInd Bank. IndusInd Bank was, had a 4% move. It's corrected quite a bit. Gas Authority of India, Infosys, Yes Bank were some of the other sort of index gainers. Broader gains coming in from the housing finance pack. I mentioned Indiabulls Housing, which is part of the Nifty, but there was DHFL, there was PNB Housing, there was Repco, NBFCs like Piramal Enterprises, and actually I should call Piramal a conglomerate, but IIFL. So financials and NBFCs and housing finance companies surged. Cummins India, Mindtree, Torrent Power, IRB, ABB, Dilip Buildcon was up about 7% or so, and something like GHCL rallied in trade today as well. As I said, not touching upon reds because, they were losers, but it was clearly a day for bulls. Lata.
Okay. Well, with that, let's get our experts in and find out where do we go from here. First, the man of the charts, Ashwini. It was a runaway rally by the end of trade. What are your thoughts here on?
Well, what happened was entirely similar to what happened day before yesterday, where, a very short market gave you a sharp rally. Then, yesterday and today in the morning, people went short, booked profits, etc., etc. And then again, the market got way too short, and from there you had a rally. And this is the character of the market that you need to trade. If you keep expecting day-on-day gains or day-on-day losses, you'll be disappointed. This is not a bull market. The rallies look ferocious because a lot of it is short covering.
So then, will this last? How much more, Ashwini?
Short covering rallies by their very nature don't last. But sure, we can go up to 10,600, 700 and then again fall. See, a lot of price damage is done. Now a lot of movement in the market will be sideways, going nowhere, running up, coming off, that sort of movement. So you have to pick your spots. I don't think there's a great trend which is in place. It's basically 10,000, 10,600, 700 till we get fresh triggers in terms of election, etc. That way. Today's rally was engineered because of morning news.
All right. With that, we come to the second headline now. NBFCs rise after tensions between RBI and government appeared to have eased off. That triggered expectations of some easing in liquidity rules. That sparked a rally in stocks like Indiabulls Housing, DHFL, Edelweiss Finance and others. Meanwhile, sources tell CNBC-TV18 that officials from the Prime Minister's office will be meeting top bankers and senior officials from North Block on Friday, and they are likely to discuss actually the liquidity crunch in the debt market. Our colleague from Delhi, Timsi Jaipuria, joins us to tell us exactly what she has picked up on this meeting. Timsi.
Absolutely, what sources are indicating that PMO is likely to hold a detailed meeting with banks, senior officials of major banks and finance ministry to discuss the liquidity issue, especially for NBFC sector. What we are also picking up is the fact that meeting is likely to address the liquidity shortage in the market and come up with certain proposals and certain measures that can be an immediate relief for the liquidity crunch. DFS has been asked to quantify the current liquidity required, be it for the NBFC market or for the MSME sector. PMO is also likely to ask Finance Ministry to prepone the planned capital infusion for PSBs, which was pegged at 45,000 odd crore rupees for this fiscal. Government feels that this advancement of capital infusion may help some banks to also come out early from the PCA framework, which is one of the major relief that the government is looking at. Also, Finance Ministry is likely to ask SIDBI to increase credit guarantee fund to ease loan availability for MSME sector. So all in, Prime Minister's office is coming into action, trying to come up with a possible solution when it comes to the liquidity crunch that the market is facing right now. Let's see what happens on Friday. Back to you.
Okay, so we don't have to wait that long. Timsi, thank you very much. Prakash Singh from Jharkhand has written in with a question. The question is on GRU Finance. He's been holding 100 shares of GRU. His cost is 396 rupees a piece, and he's been holding the stock for the last 20 days. I mean, he's about 100 rupees under. He's a medium-term investor, wants to know whether you should hold or sell. Prakash, what would you tell him?
So, I think it's a great business, no doubt. Probably he's gotten at a time when, it was, fairly exuberant. The mood was of exuberance, and it was just probably before this, bomb of the NBFC debacle would have hit him. But whatever we've heard of in terms of the company having raised money, about 2,500 crores that they've raised at very decent yields, and then the fact that they are one of the pure play rural focused HFCs, do a lot of PMAY business as well, and not too much of developer loans. I think he's in safe hands in terms of his capital. So there is no reason to get alarmed given the situation. And if he's a medium-term investor, which I read as 6 to, let's say, 12 months, he could probably wait it out and things could start looking up. And maybe decide on it by the time the next couple of quarters of numbers come through, and then take a call, but don't book a loss in this panic situation.
Okay, yeah, actually 100 rupees lower than where he has purchased. Ashwini, your take for this gentleman?
See, it is not the smartest stock to hold. I mean, for last couple of years, this used to trade at 800. I mean, there is over ownership, money is tight. So this is not the best circumstance to buy these NBFCs. Their game is up. These days, pharma, IT, rupee sensitives is what is outperforming. So please choose your stocks properly. What worked last year may or may not work this year. Chances are it won't. So for the moment, stick to IT or pharma. If you want to hang on to this, you can say to 250 to about 350. I don't see any of these housing finance stocks making new highs.
Okay. Well, I have a feeling that the gentleman has reported his price wrongly, because in the last 20 days it has not gone to 396. I think it is 296, and he probably has just
actually the all-time high is only about I think
350 or something.
382.
Yeah. 382. So I think he's bought it at 296 20 days back. In any case, that's the advice. Don't expect too big a gain is Ashwini's advice. But Prakash says that for the long term, you will not lose your capital in GRU Finance. It's a well-run company. We go to the third level.
Absolutely. PSU banks had a field day thanks to Bank of Baroda's stellar second quarter results. The Nifty PSU bank gained more than 2%, with State Bank of India topping the charts. Nifty Bank also battled for the bulls, gaining over 1% in trade. I mean, that was led by ICICI Bank, Axis Bank and IndusInd Bank. I think we've got a question on Bank of Baroda, Lata.
Yes, A. Bhagyaraj from Bihar has a question on Bank of Baroda. It's a lady, is it? He's been holding 1,000 shares of this bank at purchase price of 172, has been holding it for the last 10 months. She says she's a media minister, wants to know if she should hold or sell. This is a very relevant question, Prakash. I mean, there are lots of people who must be holding Bank of Baroda around 150 at least, if not 170. Good numbers, so stay put.
You know, but she would still have to stick her neck out and average. I know the quantity that she specified is already quite a bit, but if there is the gumption to buy some more at these 100 whereabouts, it'll be faster for her to, you know, get into the money. That's my feel, because the move from here to about 125, 128 could be fairly rapid. But 170 is a long, long way away. So whether that happens within the next 1 year or not, it's difficult. 70% of an upside, I don't see such significant, you know, traction. But yeah, 25 to 35% of this thing is good. That's the only way to get out of this tricky trade now.
Okay, yeah, it's too tall an acquisition price. We have to take a break, but do stay tuned. Before we go to that break, here's some market opinion from some of the experts we spoke through the day. They are coming back and taking more questions.
This time the valuations were very, very high, much higher than what it was in previous episodes. There was no opportunity to give a big buy call, but having said that, now with the kind of valuation correction that we've seen, we are in this in-between zone where neither is the market expensive, neither is the market cheap. There are a lot of scope for volatility over the next 1 year. So I believe that we are in an accumulation phase in the market, but I don't believe that we are in a phase where markets are very cheap and you can take a big buy call yet. But I would say these are good periods to accumulate investments with a long-term view.
Really don't want to speculate on rumors. But, you know, clearly the reality is that we have seen in the U.S. itself, President Trump be extremely vocal about his disagreement with the direction taken by the U.S. Fed. So it's not surprising that governments around the world, and I guess India is no exception, where the governments and central bankers are not seeing eye to eye as the liquidity flood that has propped up economies and made people feel good. As that liquidity is ebbing, politicians are looking for people to blame, and central bankers have become, I guess, a popular whipping boy. I certainly am hopeful that good sense will prevail on all sides and there will be nothing untoward.
And it was a big, big day for the bulls. We are telling you the stories which mattered. We're taking questions and our experts are answering them for you. We got through 3 of the top 5 stories. Here's the 4th one. From the earnings corner, Tata Global reported Tata Global earnings disappointed the street with a weak set of numbers for the second quarter. The stock had to bear the brunt and ended 4% lower, this on a day like today. Meanwhile, FMCG giant Dabur reported a muted set of numbers and was down almost 3%. Let's quickly wrap up these 2 numbers with Mangalam, who's standing by with some of the key points. Mangalam.
Dabur reported a subdued set in the second quarter numbers. The revenues grew about 8.5%. We were working with a number of 12.5%. We also saw the margins compress a bit, 20 basis points year on year. And on the back of that, the net profit growth came in at just 4%, while the street was working with a number of around 8%. Volume growth, lower end of the expected band of around 8 to 10%. The domestic volume growth came in at 8.1%. Management attributes that to the shift in the festive season and slightly higher competitive intensity. So the stock was lower in trade today. Tata Global Beverages too reported a weak set of numbers. Revenue grew just 4%. EBITDA was down 22%. The management said they continue to focus on individual brands. Let's see how that goes.
Okay. So those were the highlights of the 2 FMCG companies. Tata Global came overnight, of course, and was not a very pleasing set. Pradeep Kumar from Hyderabad has a query on Dabur's numbers. He wants an outlook on the stock for the long term. Okay, now, Prakash, he's not worried about this time the volumes coming in much lower than expected, but he's asking you if it's a long-term good hold.
No, it is. But if you ask a supplementary question of yourself and whether you'll get Dabur at lower levels, my answer is yes. In the next 6 months, you'll definitely get it at least 20% lower. So should you be buying at that time? Should you be adding? That's what you need to look at. But yeah, I mean, it will always come back given its diversified export portfolio that it has. You know, it has a very decent product portfolio overseas as well. But I think all consumption stocks, particularly the FMCG variety, will have to do a little bit of a reset and live with it.
Ashwini, your sense, Dabur?
Dabur, etc., these stocks, don't rally very sharply. They don't come off very sharply. Basically, safety type of stocks. But again, it's around its 200-day moving average. If you have $1,000, put in 100 every month. Till the elections, things will be choppy. There'll be all kinds of data floating around. So, if you can, accumulate in this 350, 380 zone, I think these will be good levels to, accumulate and hold on for the post-election rally, whatever we have. But just to buy here and then, hope that it goes up, that's not such a good idea. Start doing your ETFs, start, working on your blue chip stocks, buy them every month. That process should start. But to just buy at one price and think now it should go up, that'll lead you in trouble because you will get underwater 10, 15, 20% based on, these knee-jerk election reactions and, global markets, etc., etc.
Okay, Ashwini, we move on to the fifth and the last story today. More earnings, that is. Lupin second quarter results were largely in line. However, margins were a slight miss and remain weak for the second consecutive quarter. Revenue was flat, but profits at 265 crores met the street expectations. We also had Tata Motors, which reported another weak set of second quarter earnings. Let's quickly sort of wrap up these numbers from Tata Motors with Sonia, who's standing by. The stock will react tomorrow morning. Sonia.
Well, for Tata Motors, the numbers were weak on the JLR front, but not as bad as anticipated. The JLR revenues fell about 11%, coming in at £5,635 million. The margins, that's the critical aspect that the street tracks. The margins were down 270 basis points year on year, coming in at 9.1%, but the expectation was 7.8%. So it was higher than the expectations, and it was higher than what we saw last quarter. Last quarter, remember, JLR margins had hit a record low of 6.2%. So on the back of that, perhaps you could see a bit of a relief on the stock. It was another quarterly loss that JLR reported of £101 million, but it was in line with street expectations. The standalone business, in fact, was a bit weak. The revenues were fine for the standalone business, but there was some cost that the company had to incur, which impacted their profitability. And all of this dragged the overall business to a big consolidated loss of 1,009 crores. However, like I mentioned, because the Jaguar Land Rover business has seen an improvement quarter on quarter, and there's no shocker, negative shock this time, maybe you could see a bit of a recovery in the stock tomorrow.
Okay. Prakash, your word on Tata Motors?
So I agree. There is relief of sorts. It could have been much worse. What I would need to look at, and post the con call, we'll get some clarity, which is currently on. There is this possibility that this is the beginning of a positive turnaround in JLR margins. So this improvement could probably be the indicator that things have finally bottomed out and the worst is behind us. If that is the case, then probably the stock will see a significant move. But tomorrow you'll probably see a little bit of a relief rally. Then the follow-on buying could happen in the next couple of days.
Okay. Well, with that, let's come to the other big number that came after market hours. Infrastructure giant Larsen Toubro reported a stellar second quarter number. Anisha Jain to decode the numbers.
Well, you really can't find fault with these numbers. A revenue growth of 23% versus expected 13%. Consolidated EBITDA margins came in at 11.8%, an improvement of 50 basis points versus our estimates. And the profit came in at around 2,000 crores on an adjusted basis versus the expectation of 1,700 crores. Even if you look at the internals, they are very strong. In fact, the infrastructure segment reported a growth of 22% on the top line. The margins, yes, depleted a tad bit. But if you look at the core ANC business of the company, that has jumped by 14% and the margins have expanded by around 70 basis points. Even if you look at the balance sheet, 110 basis point improvement in the working capital, and the guidance has been maintained. So all round beat coming in from the company.
All right, on that positive note, we're going to wrap up on this edition of Markets Today with the news that we've got a couple of results which are likely to be positive for the markets tomorrow, especially Larsen Toubro. And we also have the ease of doing business numbers, which has pushed up India's rank 23 places from 100 to 77. There's much to cheer for the bulls. So the rally that you saw today is probably not over. Thank you for watching this edition of Markets Today.